Market Wizards, The Next Generation, the new book, a fresh installment in the legendary series that profiles some of today's most extraordinary solo traders. Gentlemen, thank you so much for joining us. We are very excited to have you here. Tim, good to see you as well. Long time no see.
Always a pleasure. But thank you guys for joining. Very excited.
Yeah, so Jack, I can legitimately, and I know I'm not alone here, I can legitimately blame you for getting me into this game. I remember a time coming back from where I grew up around Boston on the Amtrak. My dad had handed me over the holidays this book called The Little Book of Market Wizards. And this was like a shorter highlight reel, like greatest hits package of whatever had come out at that point. And it really just had a bunch of just amazing quotes from these amazing traders. And that's what got me from being really curious about markets, studying them, but it was like a hobby, to, man, I want to become a trader. And so I can both blame and thank you for that at the same time. And I know I'm not the only one.
Thanks, Bill.
Tim and I have a little bit of a unique perspective on this book that you guys just put out, because we interact with a couple of the characters in your book fairly regularly, right? Lance, who comes into our office, participates in our monthly meetings, serves as a mentor, a trading coach for a lot of us. We reach out to him if we have issues. He's a great guy to talk to. Shark, been on the desk since I got here. We've observed him not only on the desk, but through our blotter, which shows his trades, and we're able to follow his positions and see what he's doing. We hear him in the AM meeting every single morning, talking about his game plan, talking about his trades. One of the things that has always stood out to me about Shark is that A, he's a great guy. B, he's so level-headed. And C, he has an unbelievable amount of bandwidth as a trader. Like, we'll see him manage many, many positions at the same time and trading many strategies at the same time. I mean, I remember one time there was a gold trade. He top ticked out of it. He was short, got stopped out. And this was a big trade that he was hawking. And I remember in the morning meeting, he was just like, yeah, got stopped out, gonna have to reset. You know, we'll look to get back in. And it was like nothing ever happened. And he's so steady. And we always pick up on these traits, even from the desk, just kind of being like, you know what, like I strive to be that steady as I trade. So my question for you, for both of you, at this point is, like, trading requires an immense self-awareness, right? But expressing that, you know, thing that makes you great is entirely a different thing. So does your impression of what makes Shark great align with what we see on the floor, or did you observe a different side to his trading style and what drives his success?
Actually, I think you really you really got it correct. The one thing that I would say about Sharpness is that maybe more than any other trader I've ever interviewed, he just had a great variety of different types of trades, and going through more changes per year, than anybody I've ever met who's been a successful trader. So most people have a style. They might change, evolve, pick up something else. But Sharpness, first of all, he's gone through numerous styles, still using lots of them and using them simultaneously. So not only different strategies, but different time lengths. And then to throw into the mix, combining some of those with options, various option strategies, both selling and buying options to create a type of position that has a profile that he wants. So there's a lot of complexity in what he does, and it seems to come natural to him. But I think you really got the thing that makes him kind of different than most traders, even successful ones.
You know, I think you did a good job of summarizing it, but one of the things that you find again and again is traders have to find a style that suits their personality. And Kenny, I guess I call him Kenny Sharpness, but he really has been a multitasker from the beginning. At one point in the interview, he tells us that when he was in college, I think he was writing a paper on one screen and playing poker on another. So he really found a style that fits his personality and works well. You know, one of the other things, we're actually editing the audiobook at the moment. So I listened to his chapter earlier today, and it's fresh in my mind. And we really dug in because on the surface, what he does, to us at least, looked like kind of chaos. Just so many different strategies and trades and so much going on. But one of the things that I think we did that was great in the book is we dug in and found out that, you know, most of the money that he makes relates to a few days a year and a few different trading styles. So I think people that read the book will find a lot of benefit in that, and just seeing how where he's making the bulk of his money comes from a couple styles, a couple days, and how the larger amount of trading that he does fits into that mosaic. Because it is relevant to how he does what he does, but it's not driving the bulk of his profits.
Definitely. I wonder too, because he has definitely adapted through his years. And it's interesting in this new Market Wizards, we know a couple of them, and they do talk like pretty regularly as a pod, where I would imagine some of the newer strategies that Shark or Kenny developed was as a result of that pod. And I'm curious if that was ever as much of a dynamic like 20, 30 years ago with the market wizards.
I don't think so. They're pretty much so, I always think of them as solo players. Although you have somebody like Dennis, of course, he had the whole turtle, but he was being a mentor, not so much getting ideas from anybody. So I think in almost all the market wizard books prior, you're basically dealing more with solo actors in terms of the trading, rather than a group exchanging ideas. And I know in this book a number of the wizards know each other very well, and it's not a coincidence, because one of the things I've done, and we did again in this book, is I will ask people I am interviewing, who do you know is really good, who should be in this book? And so a number of names come that way. So it's not a coincidence that they know each other.
Okay, because I was curious, because back in the day, like, these names were, I assume, like, large, well known, because they're managing funds, they're in the public eye. A lot of these, Shark is fairly unknown. Like, a few of these traders have very large social media presences. But do you think you would have discovered this class without social media?
Well, specifically, some of these traders probably not. And like I say, asking Lance, in fact, was the first key, if I'm correct, in recommending a few of the other traders, and that led to a number of the interviews. So Lance was kind of linchpin on that. Correct,
Okay.
George?
Yeah, that's right. Although Dr. Brett Steenbarger reached out about Kenny, so that's how we found him. But it turns out that Lance and Kenny are, should I call him Shark or Kenny, or it doesn't matter?
Yeah, whatever you call him.
Okay.
Shark on the desk for us.
Okay. Well, Shark is Kenny, but obviously Lance and Kenny are friends. So, but he did not get introduced through Lance.
In terms of Shark, we've noticed that, like I said, he's very level-headed, and he really keeps a steady posture when he's on the morning call, and it's really hard to tell whether he's winning or losing. Did you find that, like, he was a trader who was particularly steady amongst all of these traders? Was that like something that stood out to you, or is this a quality that everybody has?
Well, being kind of calm and controlled trading, even if you have a lot going on and the market's moving against you, that's kind of been a theme all through the books. Going all the way back to the first Market Wizards book, Paul Tudor Jones. I still remember Paul Tudor Jones talking about his idol, Eli Tullis, and talking about how he was in Eli Tullis' office on a day, and Tullis had a really bad day and lost millions, and he had some guests in the afternoon. And, what really struck Paul was that, you couldn't tell. I mean, he was completely cordial, he was in a good mood, and his visitors could never tell that it was a bad day or a good day. And I've seen that repeatedly. I think of another good example, pops in my mind, but there's tons of them. Jimmy Baladimas, who's a very unusual trader, real contrarian, always going against the market. But I remember going to his office on a day where he had been short. He's so contrarian. He was short, kept on shorting stocks in a month where you couldn't get more than 2 days down in a row. And the last day of the month, there was a good day for him. The market went down a couple of percent. There was some news item, and the whole screen was red, which was really good for him. But hey, you can tell that he had just recouped his month losses or anything. He was just kind of completely calm. It's like, I mean, no, I wouldn't say calm, but what was going on in the markets was just unrelated to his mood. And I've seen it over and over. And the classic tale of Nerves of Steel is Stanley Druckenmiller, who did the worst trade ever that you could imagine, which was switching from short to long the day before the October 1987 crash. And that Monday morning, having the presence of mind to go in and cover his entire leveraged long position and go back short again, right in the instant the market was tradable. So you have that repeatedly. I think that's a characteristic and it came up in this book a number of times as well. Yeah, one trader mentioning that it was that he doesn't know what it is, but he always had this ability to be calm wherever people were panicking. In nothing like fazed him. And this was a trader who who had some really nerve-wracking drawdowns, but apparently was able to kind of just had the mental fortitude to not let it affect him. He also blew up a few times before he finally got it going. But all in all, he ends up being maybe the most successful trader in the book.
That subject of blowing up comes up a lot in your books, I've noticed.
Yeah.
This kind of idea of overcoming adversity early. And this question goes for both of you, but I'm curious if George, if you find that to be a common theme as well, but also in terms of this new class of traders, is this even more of a theme with the lone traders than it even ever has been before?
Yeah, I mean, these guys are persistent and they tend to have faith in themselves even when there's zero evidence to support that faith. And that shows up in these guys, and it shows up in guys historically to a degree that we've asked them, like, how did you blew up your account 3 times, 4 times, whatever it may be. Your family's telling you to do something else. You know, the entire world, your results, everything is telling you you're not cut out for this, and then they persist. And usually they don't have a good answer as to why they have faith in themselves. That, I guess, at least to me, is convincing, but they do. So where does that deep faith come from? I mean, I guess you could turn that into where does any deep faith come from? But regardless, they have deep faith in their abilities despite no evidence. You know, as to whether it was more present in this book than others, I'd say maybe, only in as much as I think that it's a different trajectory for independent traders or prop traders than it is for hedge fund managers. It's kind of a different game. And there's similarities, but these guys, to a degree, it's them against the world. And so I think that the faith, their goals are different, and the faith probably is more present there. Whereas you get a guy who launches a hedge fund, a lot of times they're coming out of a prior hedge fund and they have faith in themselves, but usually they're more proven, I guess, in the modern era. So I would say the pattern exists since the beginning of the series, but I think that you see a little bit more of it in this one, but maybe that's just because it's more independent traders.
Yeah, I mean, the fact that you guys went out and studied these lone traders, these retail traders, prop traders, I mean, that's what a great thing to expose these types of traders to the world who typically don't get a lot of screen time, I suppose, today in terms of social media, like some do, but that's a very different thing. It's obviously like a brand new element to the series. And so Tim and I were talking about this, before we got on today, and one of the things that we were most interested in finding out was the question of what makes these traders great has always been a question that runs throughout. Like, we all know that. Anyone who's read these books understands that. Like, that's one of the things that we're trying to answer all the time. Has the answer to that question evolved over time, and is the answer to that question different with this new class?
Well, a lot of the elements are the same, even though the styles are different. And if this is a book, what you do have different is the strategies. You do have people in this book doing stuff that not only wasn't done by any of the other traders in the previous Market Wizard books, but would almost be anathema to those traders. So one common thing you'll find in all the prior Wizard books is there's a large percentage of the traders that one way or the other, they're all doing different things, but when you boil it down to its simplest profile, they're doing asymmetric trades in their own way. The vast majority have some sort of asymmetric trade. When they win, they'll win a lot. They're setting up trades where if they're right, they'll make a lot, and if they're wrong, they won't lose that much. And most of them lose more than half the time. And that's kind of common. In this book, you had a number of traders start out with a strategy of shorting small cap stocks, which is the exact antithesis of a positive asymmetry trade. Best you can do is the stock goes to zero, as some of these stocks will do or go close to it. But the worst is these stocks, they're selling stocks that are going up several 100%, right? Nothing stops them from going up 1,000%, right? So it's open-ended on the risk side. And even the stop can't totally protect you because these type of situations are prone to having the market, just close because of the trading, right? It's certain limits. So by the time when it reopens, they're much worse than the stop. So that's different. That type of trading I haven't seen in any prior books. A number of these traders made it work. Most of them evolved out of that. I think only one still does that strategy, but that's different. And also, one of the traders made most of his money, not initially, but after he'd gotten too large to do a lot of small cap shorting, went on to selling out of the money options, which is not way out of the money options, but somewhat out of the money options. And again, a strategy which most of the wizards in prior books would have said, and I would say, don't do that. It's just not worth it. And most people who do that strategy blow up. But this one trader has, and the proof is, people say, well, maybe he's been lucky. Well, yeah, but he was heavily short options on so-called Liberation Day. For those of you who forgot already, that's when we put on tariffs. I'm not sure what the connection is with liberation, but the market then went down like 20% or something very quickly. He got out, well, with a loss, but pretty much unscathed, because he had that instinct to just get out immediately, because he's very sensitive to that. So he's able to pull off the strategy, which is unadvisable for most people. So that's where the differences came in this book, I think, is some of the strategies that were used were different than in prior books.
It's interesting because the reward is not the same, like asymmetry. We hear it a lot on the desk, and like Lance has done a good job like putting education out there about dynamic bet sizing, like swinging the bat hard on your A+ trades. And despite maybe they're shorting small caps that like are only going to go back to kind of where they started, and you don't have that open-ended, they're putting on so much risk on these A+ opportunities. And we see that all the time. And I'm kind of curious if that bet sizing showed up in prior books, prior market wizards, or is that, like you said, really a new phenomenon?
No, the bet sizing shows up all the time.
Yeah.
I mean, size of the bets, I can't even begin to count how many times that has come up. So that is critical. That always, most traders usually bring that up one way or the other.
It's good to know.
And
Okay.
in this book, you have, I think of one Kulamaji, who's the first chapter, and very modest guy, says that he hasn't invented anything. Everything he does, he's learned from other people. But the reason I laugh when I think about it is he started out like betting everything on a trade. I said it neither. I said, you literally mean you put all your money on one trade? And he said, yeah. Of course it blew up. I mean, but that's how he started out. I mean, you get down to the market wizards, and most of them say keep your bet size less than 1%. And here you have a guy who ultimately became a market wizard, and he started out putting 100% of his money in one trade, which is almost laughable.
We got the first chapter, which is great. I got a chance to read it, and in the intro, you gave the quick little like blurbs about all the other traders, and specifically, there's two that really haven't drawn down at all. And it feels so different than Kwalamagi, who's like more of this explosive home run type trading. And then there was a volunteer firefighter that like never had a losing month in 15 years, and then one other one. And it's interesting. Like, do you just see a fundamental difference between those like explosive traders like Kwalamagi that can tolerate a drawdown versus the styles of that firefighter that probably hates drawdowns?
I mean, there is a difference. I mean, risk, the amount of, in terms of risk management and the emphasis on risk control. So these two traders that you mentioned, in one case, you can't even measure return risk because the guy doesn't have any losses. Like, you get an infinite number. And in the other case, I mean, numbers, the return risk numbers are like crazy. I don't know, like 25, 30, Sortino, I mean, it's just completely like if you're looking at the solar system, like beyond Pluto in terms of compared to everybody else is hovering around the inner planets, their return risk is sort of like out beyond the furthest planet. So they just can't, like any small risk is almost, they just have this tremendous risk avoidance. And they couldn't trade like any of the other traders, and they can't make a lot of money. But what they can do is just make a steady amount of money month after month, after month after month. The total numbers are not impressive because they're not compounding. They keep on trading the same size, or maybe one of them increased, a bit, but still trading way small. I mean, I literally asked in the interview, I said, well, you've got this incredible return. Really, why don't you trade? Why don't you increase your size? And just comfortable doing it that way. It's just in their nature. I mean, that's what gives them this great return risk. Is just that's their great talent.
It sounds like their trading style or trading strategies were born out of the personality of the trader in terms of recognizing a certain level of risk tolerance and then designing this trading stratety around that.
That's interesting. The gamut of personalities. People think sometimes there's common personalities in trading. My God, as different as can possibly be among the population. But in the same book here, you've got one guy who's going through literally 150 million drawdown more than once, and you have other traders who like losing $10,000 is like mind-boggling to them. So I mean, the range of personalities that can do either of those. And it also shows you how important trading your personality is, because picture either of those guys trying to trade like the other guy. It's you can't imagine it.
And for the personality reason, and for the reason that there's hundreds of ways to make money in the market, and everyone's always like, what's that one recipe? So for both of you, I was kind of curious, as a fun question. I'm not asking for the one recipe to make money, because there's thousands, but if your neighbor comes to you and asks, oh, I want to get into trading, are you nudging them in any direction? Either George or Jack?
Yeah. Well, we can both answer this, but my basic answer is that most people are better off not trading. Okay, and most traders I've interviewed with George in this book would agree with that most people shouldn't be trading. And you read the first chapter. Komachi basically says that.
Yeah.
He says don't do. This I was brother-in-law, I think it was. Said just don't do it. He said, when I did this, I was a single guy. I spent 10 years with 80-hour weeks, and I had no obligations, and you're going to have like 1 hour a night if you're lucky to trade. Don't do it. So for most people, the answer is, unless it's like you do it small as a hobby, and it's certainly better than gambling or something like, because at least you have a chance to make money if you do it right. But for most people, the advice is don't do it, because you don't have the commitment and devotion to do it, or do it very small. And if you end up having some sign of success, you can grow it, but really start out small. So yes, I personally don't encourage people to trade, although, as Garrett said, in his case, and I've been told thousands of times, so probably literally, people telling me that I got them into the business, for better or for worse. But they're still in the business, so I guess it's for better.
It's ironic.
I guess my answer would be, in How to Trade in Stocks by Jesse Livermore, there's a line where he says he's never been to a party where somebody doesn't ask him, how do you make money in markets? And when he was younger, he would go through all the ways, and he says, as I've gotten older, my answer is a blunt, I don't know. And the older I get, the more I kind of think about that. I read reminiscences a little bit almost every day when I'm not doing other things. A strange guy, I guess. But there was a line this morning, and he was talking about how if you tell somebody to sell 5,000 steel, which was, I think, U.S. steel back in the day, go short, they're happy. But if you start talking to them about how you should do it and your thoughts on the markets and how to trade, they look at you like you did something terrible to them, stepped on their toe. And so what I would probably tell people is start by reading about the consistent principles that are inherent to 100 years of traders. There's always exceptions to every rule in trading, but for the most part, the best guys, they respect price action of the market, they stick with their winners, and they cut their losses. And start with those principles and incorporate them into what you do. And I think you stand a reasonable chance, if you're not too leveraged, of surviving long enough to learn. But I think most people don't want to hear that. They just want to hear Apple's going up $3 tomorrow, get long, sell on the close, you're good. So I find myself, I guess the older I get, sort of conflicted as to what to say. I find myself thinking that I don't know, might read the book, might be a good answer. But yeah, it's anyway, I would say start with the principles. Start with the fundamental principles of trading, and then build from there, and read the Wizard series, because you're going to learn different styles and try things. But yeah, that's the best I got, I guess.
I like both those answers. I mean, I have buddies that will just ask me what's going up, and I'm like, that's not even close to what we do at S&P.
Both of you have a very unique, very, very unique perspective because of the amount of traders that you've interviewed. And not many people in the business probably have that breadth of perspective. And so I'm just curious, what if a very dedicated trader comes to you who can do it full time, who has some talent, but they're looking to find their way, right? They might not have crossed that threshold. It sounds like one of the things that keeps coming up is this sort of know who you are, know your personality. A lot of the people who have become successful have found what works for them. What would your advice be for that person if they're just simply asking you, how do I find my way?
Yeah, so you have to find your own methodology. And I would say that probably, I don't know if it's more than half the time, but a good percentage of time, whatever people start out with is not what they're going to end up with, right? So it doesn't mean that whatever you land on in the beginning is going to be the answer. But you have to start somewhere, and you have to find some approach. So I advise people, read different books, not to get something on a silver platter. This is how, you're not looking for a cookbook. You're looking to get ideas. And I don't remember who said it, but it says, if you read a book and you got one good idea, then you've gotten something of value out of that. But all you're trying to do is pull some ideas and things that you can maybe test, check out. Kulamachi, for example, mentions that what he did is he got everything from somebody else, but he spent thousands of hours checking out anything he was considering. So he would check many thousands of trades and see if it does really work and so forth. So books are a good source of ideas. Of course, today you have all sorts of social media, which is a source of ideas. So you're looking for ideas. You're looking at things that resonate. You got to go with what feels right to you, what you believe in. If you're a cynic about technical analysis, don't start. Try the fundamental approach. Vice versa. If you don't like fundamentals, but the quantitative side of technical analysis appeals to you, try that. Just try things that. And the other big advice would be start small. One thing I've given this advice over and over again. I do it myself too, and I'm not a trader, by the way. I trade as a hobby. Lately, the last few months I've been trading actively, but I normally don't. I just got into it and things are going okay, so I trade. But I can stop at any point, and if I get too busy for other stuff, I'll stop. So preface, I'm not a trader. But one thing I've always done is when I do start trading again, I start with a relatively small amount, and I have a number that if I lose a certain small amount, I'll stop. And I do that all the time. If things are not going right, I stop. I come back in a few months. It doesn't make a difference. So I can never lose very, very much. And that's a really good piece of advice, I think, in general, particularly people getting into trading, is don't, if you got what you think is $500,000 of capital, risk capital, don't take $500,000 and open an account. Take 25,000. I mean, take some small, particularly when you're beginning, take some small number, and so you can't do too much damage, and you'll have opportunities to try again and again, which is necessary, as we've talked about, for many market wizards as well. They couldn't come back and try several times, they wouldn't have made it. George, you want to?
Sure. Well, first, I took some notes over here that I'll just with my thoughts, but that question it's a can of worms, and to address it properly would be very difficult quickly. You could write books on that, but I think the one thing to me is it's a tough finding the temperament, the strategy that suits your temperament is very difficult, because nothing in trading, any kind of trading, is really inherently comfortable to human beings. So it becomes sort of a cleanest dirty shirt problem. Like, if you want to wear a shirt, you got to wear one. They're all dirty. Which one are you going to wear? I think one of the best ways to do that is to study the different styles. And, at the risk of plugging the book in the books, one of the great things about the Wizard series is that you get to see a bunch of different styles and hear from people firsthand. So it gives you ideas as to what you want to do. And then you can start to look at things like, do you want to live in front of a screen? If you're a day trader, you're in front of that screen, 8, whatever, at least 6.5 hours a day, potentially 8, 10, whatever it may be. The two guys in the book who never lose money, they're in front of those screens 14, 16 hours a day. And they might get to go get a coffee or walk away, but then they're back. One thing I've found over time is if you sort of have to ask yourself, well, is this right for me? And the answer is probably no. So I would keep that in mind too, in whittling down the universe of options. But there's actually this quote that I took a screenshot of. I don't know this guy, but I think it's relevant here. His name's Jay Yang. His Twitter is Jay Yang Inspires, and I know nothing about him, but this popped up on my feed the other day, and I thought it was a very cool quote, and I think it's relevant here. And so he says, a wise mentor once told me, before you play the game, study the winners. If you don't want their life, don't play their game. And I think everybody says, well, yeah, I want to be rich. That's why I want to trade. But there's differences, right? I mean, you look at a guy like Lance or Kenny, and they're in front of that screen a lot. And there's definitely other guys like Christian Kulmagi, for example. He went away from day trading because he wanted to check in a couple times a day, not sit in front of the screen all day. So I think if you take that quote and that philosophy, study the lives of the people that you, in theory, want to try to be like as traders. Forget about the money. Just like if everybody got paid the same thing, or you make the same amount of money, like which strategy sounds well suited to you, and try to do that. But all that said, we could all read a book about riding a bike all the live long day, and it's going to help us maybe a little when we get on the bike, but you got to ride the bike to figure it out. So you really only learn your own temperament by experience, essentially. So you have to kind of start doing things. I think you can narrow it down with what Jack said, what I said, but then maybe you get in there and you're like, oh, this is terrible. I want to be a day trader. So I think it's a big, as I said at the beginning, can of worms, and there's a lot that goes into that. It's unfortunately not just an easy answer.
And that's what they tell us starting at SMB as well. Like right when you enter, and they're like, try a bunch of different strategies, learn from guys on the desk. You have no idea what's going to really suit you or where you might have edge. So it's good to experiment to start. I like that quote though. That's a great quote. Do you want to play the game? Yeah. Do you want to play the game?
Do you want their life? Yeah. That's. I think it's an important question in all aspects of life, not just trading.
Well, you do have a couple of traders in this book who end up kind of, after making all this money, saying, "Hey, do I really want to do this anymore?" It's Lance being one of them, and struggling with it because you got this. They deal with this paradox. They're so good at it. If they stop trading, they're literally walking away from making tens of millions a year, and on the other hand, they want to. They don't. It's not the way they want to devote all their time and use their life. And this is you get the real. One of the things that comes out in a couple of these chapters is the struggle once they've been very successful with. Do they want to continue, and how do they balance it? And there's more to life than trading. I think there's more to life than trading. I think it's a direct quote that I end up one of my summaries with.
Yeah, Lance is he's an interesting case because I have to laugh. Like I feel like he's kind of transitioned into the ultra selectivity mode where he's in there helping us out, giving back to the community, focusing on his health, doing all kinds of things, and then a huge opportunity will just pop up out of the market, and then boom, you hear from Lance and he's trading, and then he goes back.
Giving back is also it's kind of an odd thing, and specifically in Lance's case, because there are so many charlatans out there who are selling their services which are not worth much, and they're market wizards in the sense that they make money because they sell their services, which is I think it's a line that Rogers used in my original interview with him. But you have that, and Lance's motivation is he wants to teach other people, but but it's because he gives some of the stuff away and some of it's charged, but because he's charging for some of it, people then throw him in the bucket with these other guys. And it's kind of crazy. People who've never read the book, don't know Lance, don't know anything, but they see that he sells the services, kind of assume, hey, you guys are just being hoodwinked here. You got a guy in the book who's selling the services, and meanwhile we've gone through the statements, and we know. In Lance's case, both by talking to people, at your firm, and going through his statements and seeing screenshots from his prop days and stuff. Lots of different sources, tax returns, I think, even whatever, but. Some people just go by the fact, he's selling the services, he can't be real, and he's not selling the services for money. He's just putting it out and charging for some of it because I think he even says, and it's true, if you give something away, people will value it less. People will pay more attention if they're paying something for it. But in his case, he's actually losing money because he made this video series, and while he's doing this video series, he leaves his trade alone where he's got this huge trade, which is impact him by, I don't know, tens of millions or whatever. And meanwhile, he's doing this. He's not going to make that on selling the course for 5-10 years, so.
He doesn't need that video money at all. And one interesting part about Lance too is his process to me, I've always found it so simple. Like we talk about Shark being this ultra complex trader, and Lance loves to, at least with his communication to us, like try to simplify everything down to like the essential elements. Like take a trade, what are like the 3 most important things to do here? I've always appreciated that about him. He's always talking about that broken slot machine, which is a really great concept because I think like new traders can relate to it, right? I think if I even could explain what Shark is doing, I think a new trader's eyes would glaze over. But you can start to talk about what Lance is doing, and I think I've always found it like immediately relatable. Did you pick up on that when you talked to him,
George?
I think one of the things you find when you do these interviews is traders are often not the best at articulating themselves and what they do. And I think that, in my opinion, the books will always have a special place because you sort of have to, over time, go back to them and iron out things that maybe aren't contradictory, but sort of they have to fit better together. And I guess as I say that, Lance, in my opinion, was one of the better ones in terms of his ability to articulate what he does pretty clearly and concisely without much necessary follow-up. Comparatively, you take a guy like Kenny, and he's very good at articulating what he does in terms of trade by trade, but getting at the entire thing took some doing to understand. So, I guess what I would say is just Lance, I think, has probably by virtue of how much of he's out in the public eye, he's gotten pretty good at articulating what he does in a fairly succinct way. My personal opinion is that even with complexity, and you guys might know better than we do, but I think Kenny, what might look like complexity is really just a lot of different trading styles or trades, if you want to call them strategies, whatever you want to call them, that he's gathered over 20 years of doing this. So I think that's important for people to understand as well. It's not like he just day one had 50 trading strategies that he pulls from if you're in different kinds of environments. He's gradually built up his repository of trades over time. So hopefully that helps and adds a little bit extra.
And some of the complexity is like how he could stay in a trade in a better way in some of the option strategies.
Yeah.
So it's like still the one trade, but then he's just finding better ways to express these trades. So we've seen. With that in mind, I'm curious to ask about like the interview process and the writing process, because there are different personality types. But how did you guys prepare for each of the interviews for this latest book?
Well, in my case, I don't prepare much at all.
Interesting.
And just the basics, and I know about the person to some basics, but not a lot. And I really depend on the interview to try to draw the person out. And as I told George before he got involved working together, that try to have a conversation. Don't go in with like a list of questions. I mean, you can have your backup questions, but try to pay attention to what the answers are, because a lot of the best stuff will come by going off tangents of what the answers are. And if you're, to go on a tangent here, one of the things I say is if you want to learn something, there's two ways of doing it. You watch people who do it well, and watch people who do it poorly. Now, the interview process, person doing it poorly, and I've been on the other side of this, sometimes get an interviewer and you don't see them. It's not a video, but it's a phone call, and you can just hear them or see them. I'm saying not see them physically, but see them in your mind, ticking off the questions. They're not paying attention to what you're saying. They're just getting off their list of questions. That's how not to do it. And so the preparation isn't, it's important only to give you topics to talk about, but you want to be in the conversation. You don't want to be overly prepared in the sense of having a big list of questions and stuff like that. So that's my own approach. And the conversation I would just add here, that the actual interview itself, how many hours it is or whatever, is only the beginning process. To get that into what you read in the book is 98% of the work. I told that to George. I don't think he believed me in the beginning, but I think he does now.
I do. My answer will be I totally agree with Jack. He is the master who knows, but I prepare a lot for the interviews, mainly somewhat to have questions. But if there's something that I think we should really consider including, I'll try to identify that in something somebody has read or said, written or said somewhere before we go in. So I'll try to have background stuff and try to lead it there without steering them into a sort of a rapid fire, type of question style interview. As far as the writing, I guess I never really thought about it. I was a reader. I never had any intention of writing one of these. It's great that I am. It's the stories in the beginning of the book. But I guess I kind of figured Jack just pressed record on a tape recorder. They had a conversation and then he went home and transcribed it, and that was it. And that's dead wrong. These things, I don't know if you guys ever look at the transcripts of podcasts or interviews that you do, but people have vocal disfluencies, the ums, the ahs, the you-knows. There's one I just did. But when you read what people say, it's really choppy, it's brutal a lot of the time. And that goes for me as well. And so you have to turn that into something that people can read. And Jack, I think your comment is that about 5% of the work is the interview and 95% is what comes after.
Yes. Yep.
I'd say that's about right. Sometimes it gets a little easier than that, but for the most part, there's a lot of work to do. And you'll find they're not necessarily, as I was saying earlier, contradictions, but they're just factors that you have to go back and really be like, hey, you said this and this, and these don't totally work together. Make this make sense so that we can make it make sense. And I think that's, again, part of the reason the books will always be great. It's hard to do that on a podcast without making somebody look like a bozo, and then they won't want to come back on your podcast or nobody else will. So that's the process. There's definitely a lot of follow-up and clarification necessary, essentially, to create the finished product.
Right. Hopefully we're doing a good job here.
Yeah.
Yeah.
Different medium. So what may sound fine in a podcast or any verbal exchange, when you transcribe it to paper, believe me, it is a goddamn mess. It is awful. People go off, they don't finish sentences. They talk about three things in the same, the answer. The same thing comes up in different places. Sentences are not completed. Thoughts are not. It's a total mess. It sounds okay because in conversation that's normal and it doesn't stick out. But if you're reading it on a printed page, it is awful. And you really have to do a lot of work to take anything that was verbal and make it read well. If I use the actual transcriptions of the interviews, it would put people to sleep. It's like
that's fascinating.
For both of you, is there anything that's ever happened in these interviews that you've never written about? The stuff that's too raw to put in a book?
Does whatever happen?
Is there anything ever happen in one of these interviews that's too raw to write about? Too raw to put in a book? It's too personal. Too revealing. One of the tricks I use, not a trick, but I tell people up front that they'll get to see the final version, and if there's anything that's wrong or anything that's problematic, we'll figure out a way to handle it. In other words, they'll get the right of first refusal. And sometimes they'll want to change something. I say, well, I won't feel comfortable the way to want to change it. And I say, well, what's the problem? And they'll tell me the problem, and I'll address the problem, and sort of we'll find a way to word it that's not problematic. Sometimes you have to take something out. Sometimes you have to use them. I mean, I've had where one interview I had with a short seller in, I think it was the second market, it was the new market, was just Dana Galante. But she had such a string of bosses who are horrible people. And so we had to use, I used pseudonyms for all their, what she had to say was good, but she didn't want to say it, in print against them, so we used pseudonyms. And that's happened in other interviews too, where
where you have to change certain things for reasons of being too personal or too rough on other people or whatever.
One of my favorite. Oh, go ahead, George.
Sorry. I was just going to say, nobody told us who killed Kennedy or anything, but but they have, what Jack said.
Yeah. One of my favorite market wizards is Linda Ratchke. This is just a personal thing. I've always appreciated her. I learned about her through your book, Jack, and have followed her ever since. And I just find what she has to say always interesting from a trading perspective and just a personality perspective, because she's so open and so curious about so many different ways to skin a cat in the market. And one of the things that's always appreciated, that I've always appreciated about her, is the story of where she started in the pit, where that involved certain skills and you had to yell over people. And, there's the bell.
Yep.
There's that bell. Closing bell. And, you had to read body language and read the crowd. And then all of a sudden, technology came into play and computers came into play, and some of the traders moved upstairs and started using programs and computers and charts and following it that way. And a lot of traders went out of business during that transition, but she didn't, because she really kept up with the times, which is a very interesting story in and of itself. Is there anything that either of you see now that would be equivalent to that type of situation in our modern world?
Pretty common for strategies that work to lose their efficacy. And, one or two traders that had very few losing months, in his case, he's always, he's got a large inventory trade, but he's always expecting strategies to eventually stop working. And that's almost part of his modus operandi, is to try to be looking for new ones so he can replace the ones that stop working. So things change. I mean, markets change. People don't change, but markets change dramatically. And so the markets are, if you compare it now to when I first started, to when the traders in the first Market Wizards books made their, during their trading career, you were pre-computers and, you didn't have all this data. You didn't even have printed charts. I mean, you had maybe one or two printed charts or something, but you were living in a completely different world. Just no computers, no data, or very little data. I mean, what you can gather by hand. So you go from that to this world where you've got supercomputers and multiple quant funds which have hundreds of more PhDs, working on strategies. And it's just, so the markets have changed. And if you take a very simple example, say take trend following. Some of the traders in the first Market Wizards book just made phenomenal returns, predominantly as trend followers. But back in that day, in the 60s and 70s, just having a simple trend following strategy was kind of the advanced. That was the quant thing, right? But not too many people were doing it. So the markets had trends, and the trends were smoother because you didn't have millions of people using trend following methodologies. And over time, as you got computers and it became accessible to anybody, and you had so many people using it, the trends are still there. I mean, if the Fed changes policy, it's not going to be for a month. It's going to last for a while. I'm talking about not just the Fed, but central banks in general. So you will get trends, long-term trends in interest rate, long-term trends in everything. Commodities. If there's a shortage in copper, it's going to take years to get new mines. And once you get a lot of new mines and there's a surplus, it'll take years to get rid of that. So trends exist, but what has changed is the trends have become very choppy, and the systems that try to exploit them get whipsawed a lot. So it becomes, while the trends are there, they're difficult to maintain. So the efficacy and the statistics that go with the trend following methodology are now, they may make money because the trends are there, but not relative to the amount of risk put on and the drawdowns. It works, but it's not a great strategy. It's a workable strategy, but it's nothing like it used to be. So things that used to work sometimes no longer work or don't work as well. That's been true all through the history of markets, in modern times at least.
I could chip in if you'd like. As Jack said, like short-term trading, at least done right, seems to be a discipline that needs constant grist for the mill. I think if guys like Kenny, they wind up with, who knows how many strategies he has, 50, 100, 200 that he kind of uses, but he's always adding to that. So with that, it's always changing, and I'll come back to that in a second. But Rick, who's the fireman, he does basically short-term arbitrage, essentially. He sees headlines and trades before the ARBs move, and he capitalizes on where positions should go and where the ARBs are going to take him. And he's concerned that AI might someday hurt what he's doing. And I think AI is becoming like a topic right now. Is it going to take over all trading? With Rick's approach, I think guys like Citadel haven't dedicated the resources to it yet, because the amount of people that it takes to do what he does probably makes it not that profitable. Will some super smart AI bot come along that capitalizes on all these small opportunities? Maybe. But I guess the one thing that I think of, and I was listening to Lance's chapter yesterday as part of editing the audiobook, and he said in the chapter that I think it was 2011, 12, whatever year it was, that back then he was told that AI was going to decimate what they're doing and that there was no chance that they were going to survive. And here he is, 10 or 15 years later, and he's done very well. So I think AI is more of a thing than it was then, but the threats have been there for a long time. And that goes back to short-term trading is always going to need new grist for the mill. So will that displace everything? I don't know. I'm thinking out loud of it here. The one other thing I'll add is I think that like long-term thematic stuff is very hard for computers to overcome. Because if you think about the growth in AI just as a discipline, essentially, and what NVIDIA and stocks like that have done over the past year, 2, 3, they've just gone up a lot. And I think these mega trends that last for years, I just don't see how computers are going to render that obsolete. You basically have to have a scenario where growth ceases to exist and companies don't invent products that people want that incentivize them to buy their stocks. So hopefully that wasn't too scattered, but I think it gives a good sense of what's happening now, how it might impact in different disciplines. So
I love that you said that, George. Actually, last week I saw you wrote a blog post on humanoid robots. And it actually led to us like reconstructing. We have a database that we like follow our themes with. And what I thought was super interesting, because we saw the precedent with AI, and then that was the like head horse. And then we saw the picks and shovels, and they had their day. And in the blog post, you immediately started with looking at those second derivatives for humanoid robots. So I was kind of curious, do you think that, given that we've seen the precedent with AI, that those get priced in almost quicker maybe than we saw originally?
Maybe. Yeah, I don't know. I mean,
I don't know.
I've written a lot about it, so I'm not sure which post you're referring to specifically, but
last Wednesday, if that helps. I think
I'd have to write a lot, unfortunately. I have to go back and read it, but thank you for reading my stuff. That's great to hear. I think things are moving faster. Certainly things get digested more quickly than they ever have in my career and lifetime. As to whether that gets priced in, I almost feel like maybe there's opportunity if you align with the long-term trends and use trading principles to protect against things that are sort of exogenous variables, for lack of a better term, that could impact those. So, if Trump tweets something, it could impact humanoids, but it does seem like that trend is going to continue to grow. So, as the second derivatives, I mean, one thing I've found over time, not to get too far afield from the topic here, but is a lot of people spend a lot of time trying to find these stocks that no one's ever heard of. And this is more investing than short-term trading, but meanwhile, you look at Google and you look at NVIDIA, and these stocks go up a ton. So in my personal opinion, I think sticking to the bigger ones it's not necessarily a bad thing, for whatever that's worth.
The leaders versus laggards combo, basically.
Yeah, right. Like Livermore's follow the leaders, although if you ask 100 people to define the leaders of the market, you might get 100 different answers. It gets complicated.
Yeah, definitely.
Well, we have time for about one more question. So, and this is I'll direct this to both of you. When you sat down to embark on this new series, planning it out, thinking about, imagining what it could be, imagining how it could be different from the others, choosing who to ask to be in the book, what were you hoping the trading community would get out of this book?
Jack, you want me to take that one?
Very simple for me. It was no different than any. George covers it in his preface. It's a long story how he ended up doing another Market Wizards book. And I mean, originally I wasn't going to be involved. I was just giving George advice. It moved over time to us working on another book, and then it changed into being a Market Wizard book. The story is in George's preface. But for me, once we were doing another Market Wizard book, if it's not broken, don't fix it. So I wasn't approaching it any different. I was just I tried to tell George what I do and how I do it. But my approach was exactly the same.
Yeah. George?
I guess I'm a long-time reader, first-time writer. But as Jack said, it wasn't linear. We didn't approach it. I think if we had started with the concept, we might have approached it different than we did. But, aside from obviously adhering to the brand and the series, I think one of the things that I wanted to do was to add in where I could the timeless principles that I found from my research on traders and say, look here, you see cutting losses again, or you see this. Respecting the price action of the market, things like that. So tying in what I think are the timeless principles that are inherent in the vast majority of traders and highlighting those so people could see them and say, okay, not only am I getting a good story in a modern version, but these principles are timeless. I guess the only other thing that I tried to do was add in sort of every trader's personality is different, but there are consistent personality traits. And in one of the chapters in particular, I highlight, I think it's 7 factors that are fairly consistent among the great traders and the wizards. So that was something that I tried to add, just my own take on, is what are the personality traits of these people? And one other thing I thought, maybe Jack and I should talk about this, but maybe we could get him to take those Myers-Briggs personality tests, because somebody asked me recently, have you ever gotten all the wizards to take those tests? And I think it'd be interesting if you could see consistencies. But yeah, anyway.
Start quantifying it more. Well, is there ever going to be a systematic trading market wizards?
Well, there are systematic traders typically in every market wizards book before this, except for this one, I think. These were all discretionary traders. Systematic becomes, well, like I say, I think the problem of having a lot of systematic traders is that I'm always looking for the spectacular, not the just good, not just the better than average, just not even the top 10%. I'm looking for the crazy story, like guy goes from 5,000 to 500 million, as is the case for two people in this book. Crazy. I mean, that shouldn't be possible, let alone possible in this world before the computerization and competition from these quant hedge funds and AI and whatever. Shouldn't be possible. But or the two guys we talked about who have no losing months or virtually no losing months. Those are the types of things I'm looking for. And you can't, the only systematic approaches you can do that with are if you're talking about firms like the Renaissance System or D. Shaw or the purely quant, where what they're doing, well, first of all, there's a lot of transaction advantage there as well. So you got to delineate that. But if that's no story. So if you've got a trading strategy that is, pulling nickels out 1 million times a day, well, there may be a great business, but there's no story there, right? And if you've got a quant approach, which I have done, like I did interview D. Shaw, and like anybody else, and I tried to interview Chip Simons, but he never agreed. I tried it a couple of times. But those strategies, like the take the action side, they're not going to tell you anything really specific. You can kind of get between the lines, and I made some guesses about but essentially what I think goes on is you've got literally scores or even maybe hundreds of strategies, all with tiny edges, a number of which are synergistic, where you have, it's not like one system, but it's like if these three systems all agree, maybe you take the trade, and it's a lot of short term, and it's a lot of looking at tens of thousands, literally, well, thousands, maybe tens of thousands of instruments between different options, the underlying stocks, futures, convertible bonds, everything, and looking for slight discrepancies, and you have all this stuff going on at the same time, and you get no particular system in that, no strategy in there is particularly impressive, but all together they give you this smooth return, and that's a systematic approach. But that's not a systematic approach. Well, like I said, I did interview D. Shaw. You can write about the person, you can write around it, but you can't really talk about the detail. If you're talking about a system, when people think about a system, you do this, that, a set of rules, and this is how I trade. Those things, if they're phenomenal, maybe you'll get up to, I don't really like to use the Sharpe ratio, but people think in terms of Sharpe ratio. Maybe you get one of those things to be close to, 1.5 Sharpe or something like that. But you're not going to get, and like I said, I prefer the Sortino, but or other return risk measures. But if I'm sticking with the Sharpe, you're not going to get 10 Sharps. You're just not going to get that with systematic trading, unless it is one of those methodologies I described, which is kind of different than what people think. So that's why you don't see, and that wouldn't make a good story. So that's why you don't see a lot of systematic traders in the books. Less and less over time.
Zero in
this book.
To add to that, we did try to find them. I mean, I was a quant for a lot of years, still do quantitative stuff, and I thought it'd be great to have a quant. But if they're out there, they don't want to be found by us. So I wonder if they're out there and they're just quiet or not. But we couldn't get anyone that either wanted to participate or passed the screening criteria.
I mean, it might just be an AI book 10 years down the road. AI bots, market wizards.
Well, thank you, gentlemen. This has been a pleasure for us to sit down and be able to talk to you. Is there anywhere online that people can follow you guys, Jack and George?
George, you could take that.
Sure. I'm on X. My handle is GFC4. I can send you guys a link, but I have a link tree there that leads to the ability to pre-order the book. If you pre-order, you can get the first two prefaces and the Kulamagi chapter until the end of the month. The book comes out June 9th, but that's probably the easiest way. Unfortunately, the website for the book is very long, so to say it out loud now would be painful for everyone.
Sure.
But yeah, that's the best place to start. Then Jack, as you said in your introduction, he's pretty easy to find.
So we'll put that stuff down below.
Thank you.
Thank you both again. I'm super excited to read the book when it comes out.
Sure.
But this was a real pleasure.
Yeah, cannot wait. All right. Thanks. Enjoy the rest of the week.
Yeah.